We
Hold on,
good?
we are live. Alrighty,
Are we
we
live?
are live, Trevor, and
All
I hope
right.
we don't have an echo. I hope everybody is appreciating this, and we put this together on very short notice. Welcome, everybody. This is an SF Live special. My name's Kai Hoffman. I'm the CEO of the Soar Financial Group, and I'm joined by co-host Trevor Hall. You can see him already on the screen. He is the host of Mining Stock Daily, a good and dear friend of mine who actually came to us with the idea of running it, and really excited to be doing this today. And we got a fantastic list of special guests to discuss what is happening in this space. We're discussing the silver squeeze, and we got all aspects of the sector present. So I'm extremely excited to welcome in a few minutes Phil Baker. He's the CEO of the largest silver miner in the United States. Nobody else can shed more light on the silver or the physical silver from the production side than him. He runs two of the largest silver mines in the world, so I'm extremely pleased to have him on and talk to us about the silver market. Chris Marcus from Arcadia Economics, he's written books on the silver short, so extremely excited to have him on. And David Morgan, the Morgan Report. I don't think he needs much of an introduction. His Skype handle is at Silver Guru. I think that says everything. So we're going to hear from everybody for a short bit, and I'm extremely excited to hand over a bit to
Kai,
Trevor. How are you?
Kai, Kai. Can we just lay it out there that this is very much ad hoc and informal, and that you and I literally put this together within the last hour and a half? And so to get these three gentlemen on with us took a little bit of pulling strings. I know Phil had to cancel something. I know Chris had to cancel a very important luncheon. Chris has got his battle axe ready to go. I did put out on Twitter that I am challenging Dave Portnoy's, Barstool President's Green Hammer. I'm one up on you, Dave.
Brings the sword on.
I have a
Fantastic.
sword. It's got some faux silver, some faux gold, and some faux copper.
And
So this is what I'm bringing. This is what I'm bringing to you. Come at me, Dave. Come at me.
all right, let's talk about what's happening though in the market, Trevor. What do you see? Like, let's lay it out for us. What's the silver? What's happening in the silver space right now? What has triggered it all? Let's take a look at the history real quick of the last. The history meaning very young history. 3 days, pretty much, end of the week. Now, lay it out for us. What have we been looking at, and make sense of a bit, and then we'll switch over to Phil in a couple minutes to get more of a view from the producer side and how he's handling the situation right now.
Listen, we can say a silver squeeze. What I'm seeing is silver momentum. I don't know if you have the chart, if you can pull up the chart. Just looking at it, not only is this move in the last 2 or 3 days completely healthy, it's completely justified. We've talked about for the last year how silver needed to catch up to gold. Gold had that big run up into 2020 through August and started to come down. Silver never regained its all-time highs like gold did. It had to play catch up. We're not even there yet. This is a healthy move. Where we go from here, I don't know. I think we can continue to consolidate and squeeze before a big move higher. I am excited. This is great. I thoroughly love it. I'm getting so many calls and emails and messages from people asking me about silver that never gave a flying shit. And so this is good. I'm glad more people are coming in. Now, this is not overblown. I've got to address something that people who think, this is not a healthy move. F that. This is a healthy move. It's not at all-time highs. We haven't even reached $30. The squeeze, I don't know if this is as much of a squeeze as it is just a momentum. This is a good move. We need this move.
No, I think it is extremely good to get that attention on, right? And it all started earlier this week, or actually late last week, with the GameStop short squeeze and the Reddit group Wallstreetbets bringing a lot of attention to this whole sector. And people were just looking for short sold or sectors, stocks that were massively short sold. Right, and the silver was brought up, and it got over 10,000 likes. I think the Reddit group is at over 6 million members right now, just following what is going on there, looking for the next hot pick. And fortunately, silver made it, and we're in the junior resource space. Phil is a major miner here, so really excited to have him come on in a few seconds to give his perspective. But run us through it. Like you made some bold statements there, Trevor. Like, where's this headed? Like, and I want to talk a bit. And fortunately we got David Morgan and Chris Marcus coming on as well. I really want to talk about the fundamentals of this as well. Are we even strong enough to push the silver price? Who are we fighting? Right, that's I think something we want to get to the bottom of, and that's why I'm extremely excited to have these three guests on. I'm asking you, Trevor, should we switch over?
Okay. So I posed this question. Our friend Pete Panda thinks that J.P. Morgan dropped their short position last night. Pete, I think you're wrong. I think Chris is gonna back us up, but the data shows they probably dropped that short a while ago. I think what we had been fighting was literally just sentiment. Nobody cared about precious metals for the last couple of weeks. They were chasing these high flying tech stocks. And this is why I wanted to bring on Chris. I started reading his book about a week and a half ago. A lot of great information there. Is this a Hunt Brothers type of scenario? Probably not yet. But the bullion banks are definitely scared. Like, listen, like for every ounce of silver in the system, there's 500 contracts and derivatives. Compared to that, to GameStop being short 140%. I mean, I know Chris is like laughing. He's like, every time I tell Chris he uses the word manipulation, he has to take a shot of tequila. Well,
no.
Hopefully he got his bottle next to him. But this is the game that the system was set up for them to have a higher power in the price, and now people are starting to push back. And this is good.
Fantastic. Like, let's get to the bottom of it. I've seen lots of photos on Twitter where people post their bullion and they just bought bullion. And I think it was Gold Ventures, a Twitter user with over 35,000 followers on Twitter, who told everybody, buy silver now, buy it physically. It's got over 2,500 likes, a zillion retweets as well. Now I want to switch over to Phil Baker. And I just switched over. So Phil, you're live. Thanks for joining us. Really appreciate it. Are the bullion banks calling you? Are they desperate for silver?
What we're seeing here. I just want to echo what Trevor has said. This is really just the continuation of momentum in the metal. This isn't an abnormal situation. This is something that you see periodically where you have a trigger that starts the price to move dramatically, and I think this could be that trigger.
Yeah, I think the momentum and the eyeballs itself, like, I don't think it needs to be that massive short squeeze, but the eyeballs it's bringing to this, and I had this discussion with somebody yesterday as well.
Right.
Like, even if we drop off and silver and the whole Reddit crowd disappears again, and the retail investors with Robinhood obviously having liquidity issues right now, even if they disappear, I think a couple funds will stick around and say, okay, actually, this is massively undervalued. I think that's the opportunity that we have right now. And coming back to Hecla, and Phil, we've done a couple interviews in the past, and some of the comments we got under our interviews on YouTube was like, oh, Hecla was one of the free shares I got on Robinhood. Right? So I thought that was extremely interesting. And what's your sense out there? Who are you communicating with? And what's your feeling of that market? Are you getting more retail inbounds? Like, I've been getting some posts under our Twitter feeds, like, who is AG in that case, First Majestic, or what is a short squeeze? Are you having retail investors now that invest maybe $500 into Hecla, reaching out to you or your IR department, say, what is going on? Do you see that actually?
Yeah. No, we're seeing lots of inbound calls from retail investors, and they are asking many of the basic questions as to how our market works. But we're also seeing institutional investors. And this isn't this week. This has been over the course of the last year, with this recognition that silver has a unique place in our economy, and this sort of decarbonization of the global economy. Silver is really one of the driving metals for that to happen. So yeah, this events of the last 3 days is just another leg up in a change on the view of silver.
Phil,
Yeah.
we've always been talking about there's going to be some sort of catalyst that moves precious metals higher next, right after this consolidation. In fact, we are currently seeing, as I'm talking, I mean, gold and silver are coming back down from its daily highs. But here's my question: like, we never knew what the catalyst was going to be, and in hindsight, we wouldn't have known what the catalyst was until after it happened. Do you think this is that catalyst?
Don't know, but it's certainly an element of the catalyst. It could be it, or it could be just another step to the real catalyst that happens. But look, I think over time you're going to see the price of silver reach its highs again. And its relationship with gold is going to further tighten. We're now down to, I don't know, about 67, 68.
I was going to say that broke it this morning. Yeah, it broke 70 this morning. So yeah.
Yeah, and typically when you see the silver price go up dramatically, it gets down to a level of 40 or below. And I think you can expect to see that again. That ratio between gold and silver will get down to that 40 level.
Yeah, but Phil, you're the CEO of a silver mining company. You're supposed to say that stuff.
Well, but I'm also the CEO of a silver mining company that's 130 years old, and so we're very sober about what the market looks like. And you're just going to have these periods of time when the silver price is going to move dramatically, and we're set up to take advantage of that.
Yeah. No,
I was going to ask you, maybe in terms of the silver price moving higher, like what does that do to Hecla itself? Let's say what in terms of revenue, let's if we say that, like every dollar of silver increase, like what does that do to your bottom line?
Look, we produce roughly 13 million ounces of silver. So, you raise the price a dollar, there's another $13 million of revenue that goes directly to the bottom line. There's no additional costs to speak of associated with that move in the silver price.
Yeah, fantastic. And any plans moving forward? Are you going to do a big financing? Or are you going to use that momentum right now? I'm just kidding. Because we've seen a couple of juniors announce that this morning.
Yeah, we're fortunate in that our costs are sort of all-in costs are somewhere around $13, $14, $15. So we generate, call it $10 of free cash flow for at these prices for every ounce that we produce.
Fantastic. Are you hedging at all? Are there any plans now that you see that momentum before it fades off again? Are you being offered even hedges at this price?
Certainly there are offers for hedges, but we don't hedge our precious metals. We do hedge our base metals production, and gives us a very secure stream of revenue so that we can weather the ups and downs that will occur.
Fantastic. Cool. Phil, I really appreciate you joining us. Thanks for playing ball this morning. It was awesome. We said, as Trevor said, we set this up within 10 minutes, and I hope it worked all out. And
this is great.
Really appreciate you being available. That was fantastic.
Appreciate the invite.
Thanks for coming on.
Okay, bye.
Bye.
And can you imagine being the CEO of a silver mining company right now?
It's got to be fun. I have to admit, it's got to be fun. So
just as exciting as being the CEO of a gold mining company when gold went up to 2,100 or whatever.
Exactly. So Trevor, before we switch over to our friend Chris Marcus here, I'm going to ask you to jump out of Zoom so we don't get an echo. I'm just making sure.
Oh, sure. Okay. Here.
So just making sure we have our eyes and ears and everybody out here. So this is a live session with me as the technical director and running this AV poop show here, right? So
you're doing a hell of a job.
So let's see if this keeps working out, and let me see if I can get Chris Marcus on here in a second. And I'm really excited to hear from him. I think I just need 1 second here to get him set up. I thought it had worked before. Let me just get him here, and maybe Trevor, you can talk about what you're seeing. Where's the silver price at right now, and where are the major miners trading? What do you see?
Yeah. So I'm seeing silver's February futures is at 26.90. It has come down. It tried to get up to 20. What was the high? 27.77. So it is coming down, but it's still up for the day. Gold, on the other hand, has come down about $28, maybe a little bit more than that from the high of the day. So pretty interesting, but there's still continued flow. What I'm watching here really is we're seeing a sell-off in the major markets. Futures on the S&P and the NASDAQ really have tumbled in the last hour. The Dow Jones is down over 2%. And I think it's just kind of bringing a lot of people are kind of selling almost everything right now.
Okay. All right, I got Chris Marcus on. Chris,
where's your battle axe, Chris? Show him your battle axe, buddy.
It's resting for the studio, but I am planning a concert in Denver soon, Trevor. So I hope you're going to be ready to come out. And who knows what the price of silver will be in a month or two. But great to be here with everybody today.
Oh, it's fantastic.
Thanks for having me.
We certainly miss you here in Denver, my friend.
No, it's
well. I'll be back there soon, and it's fun following what's happening today. That's for sure.
Hey, Chris. Okay, you tell me. We kind of iterated it. How many derivative contracts supposedly are out on a single ounce of gold in the system right now?
Are you saying how for each ounce of gold, how many paper claims are there?
Silver. Yeah.
I mean, I don't have. Well, I guess I have some clue, perhaps. I mean, I'd say the first thing. It's a lot of issues silver related, and maybe David Morgan can confirm this when it's his turn. We're guessing at a lot of this data, but I mean, when you look at, I think we hit 2 billion ounces traded in COMEX yesterday. I was looking forward to seeing the volume there. I think it was 2 billion ounces. I'll pull it up later perhaps, but 2 billion ounces traded. In a normal year, you only mine about 900 million ounces. So that's twice. So all these mining companies, they go out, they dig up in a regular year. Forget last year where the mines got shut down because of COVID. Regular year, it's about 900 million ounces. And yesterday on the COMEX, they traded 2 billion ounces. It's funny. I remember when I was doing the book, The Big Silver Short, one of the things that I asked David, as well as several of the other people I interviewed in there, was that for each ounce of silver, how many claims do you think is on it? And I was actually watching David. I cut out his clip again because I love his answer. And he's saying, well, it's based on certain pieces of data, about 500 to 1, but we don't even know what's in derivative land or the stuff that they're not reporting. I don't know, maybe does even Jamie Dimon or JP Morgan, could they even calculate their true exposure? Probably not. So, a lot of it's guesswork. I've yet to hear someone give an answer lower than 500 to 1. It's a lot more than 1 to 1. I think the concept is more important than duking it out over whether it's 100 or 200 or 300. I've not found anyone who can explain to me another outcome aside from eventually it's the end of It's a Wonderful Life. And that's why, I'm sitting here holding the book. Trevor, I don't know why you just waited till last week to read it. I got your copy a year ago, so I was trying to help you out. But here, with David Morgan in it, The Big Silver Short, the subtitle, How the Wall Street Banks Have Left the Silver Market in Place for the Short Squeeze of a Lifetime. I didn't just write that yesterday. That's been there for a year. I've been studying it for a decade. And perhaps the last thing I would say is that that's kind of what I thought back in 2011. The book was almost an attempt to find, I'm like, no, there's got to be some blind spot or something I'm missing. So this was more of an investigation to find where I could be wrong. And at least I stand by that subtitle of it being The Short Squeeze of a Lifetime more than ever. So we'll see if that plays out in our near future. It seems like it.
If I could jump in there, Chris, and you said short squeeze of a lifetime, so you actually do believe that the current events are strong enough to take us to a new level? Or is that just a blip on the silver price radar and it's going to be gone and nobody's going to care about it next week again when the media stops covering it and Reddit is shut down or Wallstreetbets is shut down, Robinhood went the way of the dodo bird? Like, what do you think?
Well, to be clear, I did not say that. Maybe I'd phrase it a little differently. I see Trevor's got his sword out. Hopefully I'll have an answer that pleases him. I don't want to get him upset. On one hand, you could say it's already made an impact. First Majestic's up $3 or $4 in the last 2 days. So,
is that sustainable?
Yes, but perhaps no. I mean, it's like a tie game in the fourth quarter. I think people assume this stuff. I mean, and I can understand that because a lot of the things are rigged. A lot of things are planned in advance, and I think when you really study and look at the things that have happened, but I think there's also that degree to which, it's not decided. And I think this is incredibly exciting to me, seeing that people are standing up and making a difference. Also, perhaps worth considering. Now, this is just something I'm wondering. Don't want to lead anyone astray here, but I see all these other things where you have influence from groups like Soros or one party or the other party. Is it at least conceivably possible that a political influence is in some way connected with what's going on? I don't know that to be the case. I've not seen any evidence of such, but as someone investigating a lot of unusual things going on at the moment, so I don't know much about that group. I don't know who's in there. Maybe Warren Buffett goes in there with his hot chocolate every afternoon, for all I know.
Yeah. Hey, can I bust in here real quick? And I want to play a little bit of the other side and maybe less conspiratorial and more just what the facts are.
Okay.
The government, the Federal Reserve has printed 30% or more of all the US dollars in circulation right now have been created in the past 10 months. Your dollar has been devalued, continues to be devalued for the last 80 years. Now they can say they're going to create another $2 trillion in stimulus, and maybe the overall population of the country will get $2,000. That doesn't make up for the loss in your buying power because of the devaluation of your currency. The government is not going to come save you, and it's not going to come in the form of a check. They have lost control, and we're seeing people move into something that is either decentralized like a Bitcoin, or actually has hard value like gold and silver. One of the things that surprised me in this week, and Chris, maybe you can shed some light in on this, is I was seeing the data from the podcast. We have a lot of young listeners, a lot of millennial type and even younger who are listening to this podcast. But I don't necessarily think that the market, the silver and the gold market, is represented by that younger generation as a whole. It's always deemed like, oh, it's like, your grandpa's safe haven market, or your dad held silver coins just in case of Armageddon. But I do think that there's more going on for a hard asset allocation from a younger generation than we probably thought there was.
I mean, there may well be. Again, I'm interested to learn more about the history of that Reddit group. I don't know that much about it. I'm sure someone who is familiar with it. I mean, it's interesting to think who could be in there. It's like, even when you have a podcast, even if 1,000 people listening, well, who are the 1,000 people? It can make a big difference. But I think more than age, perhaps I thought there were maybe two ways this could end. Either A, someone eventually shows up for their physical medal and is not there, which it's hard to know how close we are to that. But I mean, now you have Janet Yellen in the White House with a $8 trillion Fed balance sheet talking about how it's time to go big and supersize that. So,
yeah. You think
it's like,
you think 2 trillion's big, like wait until it's coming down later.
So, I mean, in case people didn't have enough reasons to buy silver yet, I mean, I don't know what you're supposed to think about that, but I mean, it's also, to me, either my entire thesis is wrong and there's no massive short position out there, or it's not levered up some insane number, or it is. And at some level, whether it's Wall Street or Reddit group or a fund manager. The real dynamic is once people realize there's money on the line, I would say when you have enough buying power that realizes or even thinks, whether rightly or not, that they can do something about it. Yeah, I think it's very vulnerable. Will we have like $50 silver next week? I don't know, but if you told me this is how it unraveled. So again, I want to be clear the way I'm phrasing things. There's a lot we don't know. There's imperfect information, but if you told me that one day my thesis is going to turn out to be correct and said, is it possible that this could have been how it went? I would think so.
Is this the opportunity of a lifetime in the silver space?
Yeah, I think so, because whether it happens this week with Reddit or next year with something else, I mean, I don't know. I can't figure out how else it unravels, because I can't figure out how the Fed undoes the balance sheet. I personally don't think they're trying or want to. I mean, I think these guys are just stealing whatever they can and hoping that no one notices. So, and that'll go on until it stops.
I think I disagree with you about the opportunity of a lifetime in silver. I think the smart trading came in when silver was down to like $13 back in 18, 19.
Trevor is still half of not only its 2011 high.
I know.
But it's 1980 high. So even before QE, before like 28 trillion or whatever the real amount is. But we're in an environment now where Bitcoin goes up 10 or 15x in a year. Nobody flinches. Tesla's up, I think, 18x since they started the swap lines a year and a half ago. GameStop, I think, was up 40x. So, I mean, we're talking about what if silver gets back to its 1980 high or whatever the correct inflation-adjusted equivalent actually is, and then goes up 17x after that.
Cool.
I know that's like people say that like it's like we're not allowed to talk about that in silver, but it seems to be happening in just about every other asset on the board.
We got David Morgan here waiting on the other line as well. We want to switch over to him in 1 second as well. So last question for you, Chris. Where are we going to end February? Give it 4 weeks. Silver price of silver at the end of February. What's your prediction with the information that you have right now?
I think there's a good chance it's a decent bit higher.
Okay, fantastic. Chris, really appreciate you joining us impromptu. It was fantastic. Thanks for coming on. I think based on the viewers we got, we actually have a lot of attention here. And use the chat as well. Like, feel free to exchange ideas. We got the YouTube chat going. We got Twitter commentary going. Use it. Chris, we're going to get you back on very soon to talk about what's going on here.
Chris, thanks
so
buddy.
much.
Miss you, man. Love you.
All right, fellas.
Fantastic.
See you soon.
All right, let us switch over to Mr. David Morgan. And let me just double check the sound that we don't have an echo coming in. I think it looks good. David, welcome on the program. Thanks for being available on such short notice, but we felt it was urgent to do it. And your name has been dropped a zillion times, so we're excited to have you on.
Well, thank you.
So a lot has happened, and maybe you help us understand it. And
Well, I think if you don't mind, Kai, I'll just jump in a little bit. Everything Chris said was pretty accurate, but I want to just kind of set the record here. The rule of thumb of the paper ratio to physical is usually around 100 to 1 minimum. It's been as high as 400 plus. However, in the last several months, it's dropped down substantially, which indicates to my thinking that the leverage boys are not willing to put on the type of leverage that they were in the past. The other part of Chris that's very accurate and doesn't get talked about hardly ever is we only know what's transparent on the futures exchange. What we don't know is what is the over-the-counter derivative market doing, which is far bigger than the transparent market. So the way he kind of smirked, I remember him asking me that question, or at least my memory was we were riding in his car out of New Orleans, I think, when we discussed this. But so I want to make sure that, to set the record straight where we are right now. And so just let me give it back to Trevor and Kai and see what kind of questions you've got.
I was wondering, one of my questions is so it's been a few days since we've seen the last commitment of traders report on the precious metals. And I'm just kind of curious, is that something you look at every week? And if that comes out later this afternoon, I mean, do you think that's really going to show really how dynamic this market was?
It won't, because it only goes through Tuesday. So we'll have to wait till a week after that to really see what's going on. But I do pay attention to it, not as much as I used to when it was way back when there wasn't an ETF prior to the SLV. You could almost trade weekly basis the COT. It was that much good information, and the timing was pretty associated with the report. That hasn't been true ever since the advent of the SLV onward, which is a lot more silver ETFs than just the SLV now, as you're well aware. So, yeah, it's still important. The last time I looked was about 2-3 weeks ago before I left the States, and it was neutral, meaning there were just about as many. It was about as bullish as it was bearish, the way I interpret it. There is a little bit of art to it, but it's pretty easy to determine when you're getting near the top and it's ready to fall in paper price, because the shorts have infinite money and the longs don't. So when you're betting at a poker table against somebody at table stakes and they have infinite chips and you've only got 1,000,000, the odds are highly favorable to the player that's got infinity to play with is going to beat the person that's got a measly $1 million.
There's no risk at the table, right? So fantastic. David, I was just looking, actually, I was just checking out SLV. I was looking at the share price of First Majestic as well, and Hecla, because we had Phil Baker on, and it seems like we're running a bit out of steam here, right? What is happening? Like, is the and I asked that before. Like, what is your opinion? Like, is this movement that we're seeing? Like, I love all the eyeballs on it, but is it strong enough to catapult us to that next level?
Doesn't look like it. I got excited yesterday. I mean, look, if you look at the last 3 days of trading, on the 27th we had a flat market that was around 25.50, which is it's an okay price, I'll call it, but certainly silver can be a lot higher. And I like what Chris said about, who knows what the correct price is, because we don't have a free market. So yesterday, this thing with the GameStop, Reddit folks, et cetera, just started hitting everybody. I was getting flooded with TMI, too much information, and it took off. And we went from around the 25.50 level in New York on the open all the way up, almost hit 27. And then it started to sell off, which means that the short sellers, the professionals, were taking it down. And it closed at about 26.50. So we're up about $1 on the day. It held through the aftermarket or the Globex. And then we opened up in New York and we got all the way up to about 27.50. And we traded for a little more than an hour. And now it's back down to, I don't know, as we're doing the interview, it looks like about 27. We need to get over 27 and we need to stay there before I get bullish on a short-term basis. I'm bullish long-term, almost a perma bull. And that's how I see it. I don't see enough momentum, but I did a little bit of arithmetic and I looked at the warehouses. And what I determined was that there's about $4.5 billion worth of metal that the register category has. So that's really all these guys have to play with. Now, of course, they, as we already said, hypothecate it 10 times, 20 times, 25 times, 100 times, whatever. It varies. But the real physical metal is about $4.5 billion. So if 1,000 people put in $5 million to take care of business. Now, not that the price going up wouldn't cause people to hold it now to sell into the market, but I'm just going to discount that and do a thought experiment that everybody holds their position. There's buyers only. So 10,000 people at $500,000 would corner the market. 100,000 people at 45,000 would corner the market. But here's the interesting one: 1,000,000 people at 4,500 will round up to 5,000 would corner the market. And I think in a nation state of whatever the U.S. is, 330 million people, there's probably 1 million that could be savvy to the silver market. But that's just the U.S., which is 4 or 5% of the world's population. So I think you could easily see 1 million people putting 5,000 U.S. equivalent into the silver market would take care of the entire registered category on the COMEX. And then it's, in theory, game over. Now, of course, a market's a market. Not everyone's going to hold as the price goes up. But silver's interesting. It always moves more when you start hitting new highs. And I think that's how most of the algorithms go. And I think someone mentioned that earlier. I think it was Trevor, that once you get to a certain level, you actually have less risk buying high for a while, because there are no sellers. Everyone that sees that silver's at, $55 and it's never been there before nominally, I'm not selling. Why would I sell? Maybe it's going to 75. So any little bit of new buying drives it up to 75. And I'm not selling. It's probably going 100. Maybe that David Morgan isn't a crackpot. And all of a sudden, a little bit more buying comes in. So you see where I'm going with this. Now, it's not just true of silver. It's true of any market. But it's especially true of silver, especially because anyone, of course, I am biased as all get out. I've devoted so many hours of my life to studying the silver market. So bear that in mind. Nonetheless, there is something to be said that silver has a unique place in not only monetary history, but the technological age. I mean, it's the most important commodity known to man outside of oil. Without oil, the world stops, basically. But without silver, it also stops. So, and there's other things that are important. I know food, water. I mean, I'm not trying to be one way about it. I'm looking at it from an investment or a monetary perspective. So let me give it back to you and Trevor.
Yeah. David, I just, that napkin math you just did was quite fascinating, actually. So thank you for that. But I just keep on thinking, I think Wallstreetbets had now has 4 or 5 million
this morning. So yeah.
6.1 million followers globally. I mean, so what you're stating,
Yeah. I mean, sorry to interrupt. It gets me excited because let's say that 5 million of them, they would only have to put in about $2,000. Game over. Game over. Is the game stopped? Stop the game. Let's stop the game. You follow my drift?
Yeah. Well, and it's like based on your examples you made with silver just going higher, nobody's selling. Well, look at what happened to Tesla. Nobody was willing to sell that stock because it was just getting momentum. And there's really a very simple analogy, right? And of course, there are other factors at play. And I've seen actually the major markets come down a little bit. I think the Dow Jones went down from over 31,000 to closer to 30 right now. Do you see maybe some risk aversion or people taking money out of the main markets? Is that what we're seeing right now, the Reddit crowd, and are people getting more conscious about the main markets now?
Well, I think the overall shift is going to take place this year, and it's going to be from things we want to things we need. I mean, the food, category I've been, I would say complaining. I've been talking about for quite some time about the food supply problem and food disruptions. And also kind of a slant on, meat bad, non-meat good. And there's a lot of factors. But the main point being that the foods prices are going higher, higher, and higher still. That's number one. Most people look at that as inflation, although it's going to be perceived as inflation, but really it's going to be more of a supply shortage, which means no one's going to stop and consider what. Most people are just going to say, it costs me more to eat. I think I better buy more food. And anyone that has savings is going to say, hey, I might want to store my wealth in gold or silver. And the spillover into silver will be unbelievable this time, in my strong, studied opinion. And the reason being that once the institutions run into gold, when the pension funds go, oh, no, there's only one thing we can do. We got to put 5% in the gold market. Oh, no, let's do 10%. So when you've got all the IRAs, all the pension funds, and all the Wall Street money that's looking for the next hot thing, and the dollar destruction continues even further, because heck, we could only print up 30% in a year more than we had and not have any repercussions. Are you kidding me? How far do you go? You go to the tipping point. You go to the crack of boom that Mises talked about so many years ago, where people finally wake up and smell the coffee and say, you know what, I don't trust the dollar anymore. And when that's hit, and it's already hit, but not at the level where it's going to really move the gold market. But once it happens, you can't turn it back. It's a psychological event. It's not a monetary event. It's not based on how much they print. It's based on how much faith and trust there is in the system. And when enough faith and trust break down to the point where people say, I'd rather buy 10 cans of tuna than hold on to these dollar bills, that's the problem.
Kai and David, I know Chris is still on, and I know Chris has actually got a follow-up question for David. Is there a way to get Chris back on here?
We'll probably completely destroy the design here. Let me get him on in a second. No, we can't. Okay. Like it's not on the live stream. So I can hear you, Chris, but we can't hear you on the live stream.
Skype, I can read it.
So,
all right. So Chris wants to know if you can discuss what would be.
Yeah, Chris, we can hear you, but the stream cannot hear you.
Yeah. So here, so Chris just texted me. He's like, What would be the best way for Reddit to actually force the squeeze?
It's always been the same story, Chris, and you know the answer. I think you just want verification. The only way to squeeze them is to get a hold of this. The thing that's beautiful is I don't know the demographics of the Reddit crowd. Obviously, they're smart, and obviously they understand how rigged the system is. So, you know, you don't need a brokerage account. You don't really need a third party in the metals world, which is beautiful. You just basically call up a dealer and you can over the phone order the product. And so you lock in your silver price at $27.50. There's a premium on the coin. You send them a wire, a check, a credit card, whatever they accept. 2-3 weeks later, you get it in your mailbox or delivered by UPS or FedEx. And that's the end of the story. So that's what's going to do it. That's why I use the analogy, the analogy I use with the napkin math. You know, there's only 150 million ounces sitting with the dealers. Again, that's a fact. That, you know, the part that was a presupposition, a fantasy maybe, I doubt it's a fantasy, is would there be much selling as the price moves up and up and up? The answer is we don't know. We certainly know that the professionals would probably sell into it because, after all, it's just a bunch of Reddit folks. What do they know? Until all of a sudden the supply starts being drained off. And now they're in a position where at 25, or, you know, they shorted more at 30 and 32 and 33 and 38. Now they got a really big short position that they really don't, they're having trouble managing. I mean, that could happen with the Hunt brothers. The Hunts bought a lot of silver a lot lower than the prices where the exchange started to get in trouble. But the main short was a member of the exchange. So they basically broke the rules. Now you'll say, oh, well, no, there'll be people that will defend that. But I happen to know who the fund manager for the Hunt brothers is. I'll consider him a friend. I've met him a few times face to face, personal, up close, talked to him directly. And he says, and I agree, they changed the rules. They said you can only sell. Well, how rare? Isn't that what just happened on this GameStop? You can only sell. Yep. So these people work from a criminal perspective and pat themselves on the back for being regulated. What are they regulating? They're regulating their own pocketbooks. That's what they're regulating.
Yeah. And by the way, let me jump in,
David.
Trevor, just a quick public service announcement. We brought Chris back on the screen. I sacrificed the whole design of our live stream here, but Chris, you're back live with us. We can all hear you. So it's great to have you back on. And maybe, like, I'm not sure, and just a quick second, not sure what everybody's cutoff time is, but I know we have a lot of viewers, and maybe we can jump to a couple questions after a couple more for David and Chris here.
I have only a few more minutes. I have an appointment here with Roskin Gold, actually, in 7 minutes that I need to jump on. Shameless plug. But I do want to just probably leave you open-ended for both David and Chris, and even Kai, about the significance of this moment in history when it comes to the financial history of, you know, the global markets. And I don't think you can downplay really the significance of what's happening and how this is like almost like a grassroots move to democratize and force transparency in markets that have just been lining their own pockets for such a long time. You know, there is a real, I think we'll look back in this in maybe in the years to come and realize this was maybe a moment in change. Do you think this could be it?
I'll take it. Yeah, I think it could be. I think you outlined it pretty well. I mean, I could go even further. I'm pretty amped up today, as you could probably tell. I mean, basically, the way I see it, my opinion, is that there is a one world religion. It's called money. It doesn't matter what part of the world you're in. Money is your God. And that's true. Now, most people won't admit it, but it is the truth. And the power elite, the banking elite that control the money system, have all the power. That's our quote unquote God, small g, I'll say. But the point is that if the people realize that the power is in their vote, in other words, you've heard it over and over, Trevor, Kai, Chris, you know, if you really want to make a change and get rid of this certain detergent that's harmful to your clothing, gives you a rash, quit buying it. And you know what? If everybody quits buying X brand of detergent, they're out of business. Well, really, the same thing plays here. If you are saying, I got all this digital money sitting in my bank account and I don't trust it anymore. I don't trust the banks. I don't trust the system. It's obvious what they're doing to these Reddit people. I want out. The easiest thing to do is make a phone call to a coin dealer and make a real money purchase. Think about it. When my dad started, when I was a kid, 5-year-old, my dad made $6,000 a year. We had one car, but my mom didn't work. And $6,000, if people don't know, a dollar is about 0.77 77% of an ounce. It's not 1 ounce, even though the current dollar is 1 ounce, because the Treasury doesn't know what a dollar is anyway. And that's the truth. I just proved it. So $6,000 was about 5,000 ounces. So one contract a year put a middle-class American man in good stead, no real financial worries, paid all the bills, was able to save, able to add on to the house, keep everybody, entertained, happy, healthy, and everything else. So you might consider that, what's a 5,000 ounces of silver going to do for you 10 years out or 20 years out, depending on your age? And the answer is, I think it'll be significant, but I've thought that way for a long time. But it'd be interesting to see a free market. So I probably overtalked it, but believe me, I'm not seeing the data I'd like to, that I'd say we're there and we're really going to go. But that doesn't mean it won't. I still believe, regardless of Reddit, it would go. But as you said, and I have to give credit here, Jim Paplava wrote the article, Silver Looking for a Catalyst. And you know what? We might get a synergistic catalyst. The Reddit might just be lighting the Atlas engines that start the rocket ship going. And then all those people that have been conservative and listen to people like me and others, obviously lots of others, and said, that kind of makes sense. He isn't telling me to put my life savings in silver. He's saying put 5%, 10% in there. And I don't trust the banks, and I don't trust Wall Street. And I've never bought a stock in my life, and I don't want to buy a stock. But I know what that coin is. That's the real money. Real money. I used to end my little videos with, get real, buy real, be real. It's maybe time to reassert that. Get real, be real, buy real. We're living in a fake world. Everything is fake. That's what Robert Kiyosaki's new book is, right? Fake. He's right on. Robert is correct.
David needs the sword. I wish you were.
I love how riled up he is, and that's actually true. Because I did an interview with Robert Keynes, and everybody knows Robert Keynes as well, the other day, where I walked into the interview at 10 a.m. I was like, Robert, what are we doing? Are we masochistic, staying in the gold silver sector, investing? Like, what's happening? It's been very, very terrible. And then 6 hours later, I'm sitting in my chair, clapping like a little kid, super excited about what is going on, right? So we've seen a massive shift there. So I just hope some of the eyeballs stick. And Chris, I got a question for you, because you've done an interview with Robert, and it came to mind just now. And you looked at the overall silver coins. I think it was you who talked with Robert. I might be wrong. But Robert looked at the silver coins, and you could see the demand of silver coins. I think I don't know the time frame. It was 3.8 million. I think it was last month, right? Is there a lag in physical demand showing up on the buy side, or is that immediate? Like, you know what I'm getting at? Like, I want to know, where can I see physical demand for like the Silver Eagle picking up, and B, like, is there a lag from physical demand to price?
Yeah, I think you're asking me. Yeah, there's a tightness in the market right now. Maybe asking Chris. Chris, I'll hand it over to you.
Chris is on as well. Yeah, so both of you could answer. Like, is this more a general question? Because I want to track it, right? Like, I want to see how real this is, because I've seen so many photos on Twitter of people posting photos of their physical bullion order, like of silver coins, right? So I want to see if there's a blip.
I before you get started, I really have to jump. I'm really sorry.
Okay, Trevor, we're going to wrap this up in 1 second. And Chris, if you could answer, and then we're done. Because
yeah, the short answer, I mean, people can email Arcadia at Miles Franklin if they, even just want to find out what premiums are doing. I also bring on Andy Schechtman, who owns Miles Franklin, every Saturday night. He'll be on there tomorrow night, provides an update of the physical market. Is there a lag? I mean, I guess you could say that. I mean, it might be like a 10-year lag, unfortunately. I mean, basically, what you're seeing in the paper market or the price on the COMEX generally has very little to do with what's happening in the physical market. Is it conceivable that we are nearing the point where those two forces revisit each other? It's possible. To be clear, there's not enough, at least that I'm seeing, to say that definitively, but you keep throwing enough darts at the board, you eventually hit something. And part of the fun, just like David and everybody else said, if you just own your physical silver, then it doesn't matter whether it's this week or next month or next year. And before Trevor explodes over there, I'll wrap up and say thanks again for having
Trevor,
me. Great
it was your idea. It was a fantastic idea. I got to host. Fortunately, thanks for joining us, Trevor. Follow everybody. Mining Stock Daily. He hosts a daily podcast on gold, silver, junior mining stocks. Follow him. He's doing an interview with a gold junior in a minute. So join his channel. He's on all of the podcasting platforms. David Morgan, the Silver Guru, the Morgan Report. Really, really appreciate you joining us on short notice. And of course, Chris Marcus, Arcadia Economics, runs a fantastic YouTube channel at Arcadia Economics, and he's on Twitter as well, Arcadia Economics. So really appreciate everybody. I'm speaking very fast because I know everybody has to go, and everybody else. Have a great weekend and enjoy the ride.